Are you listening? Truly, deeply listening? Because what I'm about to share isn't just another piece of financial advice or an empty promise of a quick fix. It's a wake-up call, a beacon for those of you who feel trapped in a cycle of living paycheck to paycheck, dreaming of financial freedom, yet unsure of where to start. It's for the dreamers, the doers, the restless souls yearning for more than just the status quo. It's for you. Warren Buffett, the Oracle of Omaha, once said, "Be fearful when others are greedy and greedy, only when others are fearful." On the surface, it's a principle about financial investment, but dig deeper and you'll find it's a life philosophy, a guide to breaking free from the chains of financial and personal stagnation. This is your daily dose of wealth wisdom and your roadmap to understanding and applying this wisdom, not just in your finances, but in every aspect of your life. Pay attention, as we're about to embark on a journey that spans from the origins of Buffett's words to the very application of this principle in your life today. Whether you're a young adult just starting out, a mid-career professional feeling stuck, or anyone in between seeking a spark of motivation and a path to financial and personal growth, this message is for you. In the midst of economic turmoil, when the market's heartbeat is erratic with greed and fear, Buffett's words echo a timeless truth. The cycle of economic emotions offers not just a warning, but an opportunity. This section delves into the backdrop of Buffett's philosophy, unearthing the wisdom buried in market cycles and the psychological tug-of-war between fear and greed. It's a narrative that questions the norm, urging you to see beyond the immediate, to recognize the potential in downturns and the caution in booms. Warren Buffett, heralded as one of the most successful investors of all time, crafted his investment approach amid the fluctuating markets of the 20th century. Born out of observation, experience, and a deep understanding of economic and human behavior, Buffett's philosophy transcends the financial sector, offering insights into the very nature of decision-making and risk-taking. The essence of Buffett's advice stems from the historical cycles of boom and bust that characterize the stock market. By observing these patterns, Buffett recognized that the best opportunities often arise not in times of economic prosperity, but in moments of fear and uncertainty. His investment strategy, focusing on the long-term value of assets rather than short-term market fluctuations, has not only yielded unprecedented success, but also provided a blueprint for navigating the complexities of investing and life decisions. Our minds are battlegrounds where fear and greed constantly vie for dominance. This isn't just about money, it's about every choice we face in life. Understanding this internal conflict is the first step toward mastering your decisions and steering your life with purpose and conviction. We'll explore how recognizing and harnessing these emotions can lead to transformative growth and success, both financially and personally. The human psyche is intricately wired to respond to fear and greed, emotions that have ensured our survival for millennia. In the context of financial decisions, these instincts can often lead to irrational behavior, such as panic selling during market downturns or speculative buying in bubbles. However, by acknowledging these emotional drivers, individuals can learn to navigate their influence more effectively. In the investment world, Buffett's axiom serves as a contrarian guide, a beacon through the fog of market hysteria. It's easy to follow the herd, to let the waves of collective emotions sweep you away. But true opportunity, that lies in the calm eye of the storm, in the moments when others let fear or greed cloud their judgment. This section isn't just about investing. It's about rethinking how you approach risk, opportunity, and success. Investing with Buffett's principle in mind requires a steadfast commitment to patience and research. It's about digging deep, understanding the intrinsic value of an investment beyond the superficial fluctuations of market sentiment. This means analyzing a company's fundamentals, its earnings, its debt, its competitive advantages, not just its stock price movements. Are you paying attention? Because this is crucial. The best investments are often made when others are too fearful to see the true value of an asset. This was evident during the financial crises when Buffett made strategic investments in companies like Goldman Sachs and General Electric, not out of blind greed, but from a position of informed conviction. Embracing Buffett's philosophy means daring to think differently. It's about questioning the status quo, whether in bull markets brimming with irrational exuberance or bear markets paralyzed by undue pessimism. Contrarian investors look for quality assets neglected or undervalued by the market, often finding opportunities for significant growth. This mindset isn't limited to stock picking. It applies to investment strategies as a whole. When the market zigs, the savvy investor considers zagging, always with an eye toward long-term value rather than short-term gains. This approach demands courage, discipline, and an unwavering belief in one's convictions, a belief that must be tempered with humility and an openness to learning. Buffett's adage transcends the boundaries of investing, offering profound insights into business strategy and personal growth. In business, as in investing, the cycles of fear and greed can lead to myopic decision-making, stifling innovation and long-term growth. But for the entrepreneur, the executive, or even the individual navigating the complexities of modern life, Buffett's wisdom provides a compass for making decisions that are bold, strategic, and grounded in core values. In business, fear often manifests as resistance to change. Companies cling to outdated models because the unknown is intimidating. Yet history is littered with examples of businesses that thrived by embracing innovation during times of uncertainty. Apple's launch of the iPhone amid the 2007 financial crisis, for instance, transformed the tech landscape, proving that periods of fear can be fertile ground for groundbreaking innovation. This section explores how businesses can apply Buffett's principle by fostering a culture of strategic risk-taking, where informed decision-making trumps reactionary fear. It delves into case studies of companies that have succeeded by going against the grain, investing in new technologies, or entering new markets when conventional wisdom advised caution. On a personal level, Buffett's advice challenges us to confront our fears and prejudices, to step out of our comfort zones in pursuit of growth and fulfillment. It's about recognizing when fear is holding you back from seizing opportunities, whether in your career, your finances, or your personal life. While Warren Buffett's advice has stood the test of time, achieving almost canonical status in the realms of investing and personal philosophy, it's not without its critics. Skeptics argue that the principle of being fearful when others are greedy and greedy only when others are fearful oversimplifies the complexities of the market and human psychology. This section explores these critiques, offering a nuanced view that recognizes the limitations and challenges of applying Buffett's advice in a literal or dogmatic manner. One of the primary critiques lies in the potential for misinterpretation. The line between fear and greed, caution and opportunity is often blurred. For the inexperienced investor or the individual facing significant life decisions, discerning the right moment to act counter to the prevailing sentiment can be daunting. Missteps can lead to missed opportunities or worse, substantial losses. Critics also point out that market dynamics and personal circumstances vary widely. A strategy that works for an investor like Buffett, with vast resources and access to information, may not be suitable for the average individual with limited capital and risk tolerance. This section addresses the importance of context, urging readers to adapt Buffett's principle to their unique situations and risk profiles. Another critique centers on the risk of over-reliance on any single investment philosophy, even one as time-tested as Buffett's. Financial markets are complex, influenced by an array of factors beyond human emotion, including economic indicators, geopolitical events, and technological advancements. A too narrow focus on contrarian investing may overlook these critical elements. This part of the article emphasizes the value of a diversified approach to investing and decision-making. It advocates for a strategy that balances Buffett's wisdom with other considerations, integrating a broad spectrum of insights and methodologies to navigate the multifaceted landscape of modern investing and life choices. In a world where information is instantaneous and markets move at the speed of light, the principles espoused by Warren Buffett may seem at first glance to belong to a bygone era. Yet the foundational truth of his advice, navigating the delicate interplay of fear and greed, remains remarkably pertinent. This section explores how Buffett's wisdom can be adapted and applied in the context of today's fast-paced, technology-driven world. The digital age has transformed how we access and process information, with significant implications for investors and individuals alike. The sheer volume of data, analysis, and opinion available at our fingertips can be overwhelming, often exacerbating the emotional swings of fear and greed. Here, we discuss strategies for filtering noise, focusing on credible information, and maintaining a long-term perspective amidst the clamor of short-term distractions. Technology, while a source of complexity, also offers powerful tools for informed decision-making. From advanced analytics to AI-driven investment platforms, the modern investor has access to resources unimaginable in Buffett's early days. This section highlights how leveraging technology can enhance our ability to apply Buffett's principles, enabling smarter, more informed decisions that balance the timeless wisdom of human psychology with the cutting-edge insights of data analysis. Ultimately, the enduring relevance of Buffett's advice lies not in its prescriptive application, but in its foundational principles. The caution against getting swept up in market manias or paralyzed by collective fear is as vital today as it was decades ago. This concluding part of the article underscores the importance of adaptability, critical thinking, and the ethical considerations of investing and decision-making in the modern age. As we wrap up this exploration of Warren Buffett's timeless wisdom, we're reminded that the principles of fear and greed extend far beyond the stock market. They are a reflection of the human condition, relevant to all who seek to navigate the uncertainties of life and finance with insight, courage, and integrity. In concluding this journey, we return to the essence of Buffett's advice: the power of contrarian thinking, the value of informed decision-making, and the importance of maintaining a balanced, ethical approach to our financial and personal lives. As we face the future, let these principles guide us toward choices that are not only profitable, but also reflective of the depth and complexity of human experience.